Mr Price Group is a value-oriented, mostly cash, fashion and home goods retailer with a market cap of 57.3 billion rand, trading here on a price-to-earnings ratio of 20.1, dividend yield of 3.1.
Yeah, look, this is an interesting case because they sort of fell off the perfect pricing chart pattern that they were on for many years. I mean, let's take a look, because you can see just how good that chart was 2012, 2013, 2014, 2015. They seem to be, basically recession proof, if you can call it that.
Could we say that they are in recovery mode, looking at that stock now?
Well, the interesting thing is when we had a show about Mr. Price in early 2016, Sid Vianello and I discussed this one, and we thought they were most susceptible to competition and that the sector didn't look that good. But to be fair to them, and then we sold them a tiny position we had in the portfolio. And since then, they've recovered and gone higher and higher.
As of course they would.
Yeah, as they would.
As they would. Let's get your thoughts on this one, Grant.
I do like it, but I think it's very important just to elaborate on that competition that we've seen coming into the market. I mean, we've seen Zara, Cotton On and H&M, and I think H&M specifically quite a low-cost offering, and I think Mr. Price...
And that international brand.
Yes, but I mean they are only in the premium malls. So in your Sandton City, your Mall of Africa, your V&A Waterfront, so they don't match that footprint. But I think that you won't be paying up for Mr. Price, given that the competition has increased. It's a great quality management team and a good quality counter, so I do like it.
Given the competition that you referred to, do you still believe that they're going to be able to hold their own?
I do, purely because
of their broader footprint.
That's it. I don't think you can match their footprint. I also think this gives them a time to sharpen their pencils and to get their fashion correct.
Paul?
Yeah, look, what I said earlier about scale and fast fashion retailing, it's important to note. I'm amazed when I go around the mall sometimes. You see these old, like, single store fashion outlet clothing stores run by one like old owner, and you think, how on earth do they survive? Because they have the same stock and it stays there month after month after month. So they must just have like a tiny clientele that really likes them and enjoys the service. What the fast fashion retailers did is they said, we've got to have lots of outlets and we've got to have quick turns. So we're going to bring things in and they're going to be at the front of the store for 10 days. If that doesn't sell, we cut the price by half and put it in the back of the store, and if it still doesn't sell, we send them back to the supplier. So that model. And then they decided, look, what we're going to also do is follow what's going on the fashion ramp in Paris and Milan and New York, and then we're going to get it made in China for a tenth of the price, and we're going to have it in the stores. So that...
In your previous life, I see you ran a clothing retailer.
So this was a revolutionary model, because suddenly people would go into these stores and find, A, it's very fashionable, B, it's very cheap, and C, it's new. So it was kind of that perfect combination. Having said that, that's exactly what Zara does, and that's exactly what H&M does. And those other international competitors hadn't been in these markets yet, but it's just kind of finding its way. I think Mr. Price remains very attractive.
Do you regret? Obviously, you must have some regret, considering it's gone up since we sold it.
Yes. Although remember that Woolworths also does the fast fashion retailing thing, like we were saying. And then the other one that we have is Foschini in the portfolio, which we sort of did a switch.
Yeah.
And then we also have Brait, which owns New Look, which is a UK and European-based fast fashion retailer. So you can see we still like the model.
Hot or not?
I'm hot.
You're hot on Mr. Price. Paul, hot or not?
Yeah, I think you do have to call it hot because they continue to do well. They're in recovery mode, so they're inexpensive, and just generally, they've got such a great footprint that I think they'll continue to do well against the foreigners.